Welcome to the Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
Hello, and welcome to the Liquidity Event. We're your hosts, AJ
and John this week.
Woo! This is episode 117, being recorded on Tuesday, September 3rd, airing on Friday, September 6th. How are you doing, John?
I'm doing well. I got a half marathon this weekend, so gearing up for that. Another race that I haven't been training enough for.
Love it. Just throw you right into it. Happy post-Labor Day, aka the end of the year.
That's why you have Fial John here and not Summer John here?
Right, Summer John is over. Summer John has retired. Now we are in Fial. It is a freaking beautiful false fall day here in New York City. Not fall yet. We call it false fall, where it's like, it was 58 degrees this morning when I went out for a coffee. I put on a sweatshirt.
The sun is shining. The air is crisp.
I'm so happy right now.
Love is in the air, maybe. I don't know. Not for me, but for other people. So it's that lovely time of season.
Also, we're twinsies. We're wearing like old man pale yellow matching shirts. I love this.
We should be out on the golf course right now.
I know. I wish. I have a question for you that I was just thinking about. Speaking of retiring.
Yes.
So a couple things. So like what is like the measure of financial success? Like a lot of people think of it as like, okay, having $1 million in the bank is one that comes to mind. Or like, we talk a lot about like financial independence with our clients. Over the weekend, I purchased Viva paper towels, the fancy. They're like $2.99 a roll, and they're like super absorbent and cloth. And I was like,
they're very soft, right? If I remember correctly,
like,
they're very
I've
soft.
made it. This is what true wealth is to me. Being able to buy Viva, an 18 pack of Viva paper towels, having a place to store it.
An 18 pack?
18
Did you take out a home equity loan or something?
I took out a HELOC. Yeah, exactly.
What the fuck?
And I was like, so to me, in the New York City totem pole of wealth, this is the second one. And the first one, there's probably some in between, but the first one is being able to take a cab or Uber to the airport and not worrying about it ruining your financial life. That's a big one.
Interesting.
That was like a big crossing that happened a few years ago for me, more than a few years ago. That's like a big one, which is like, okay, I'm going from, it cost me $6.75 to get to the airport, or however much the air train costs. Air train's like $6, $8. I don't know. Uh-oh. I'm so out of touch. Oh no.
Wow. Look at you.
Me and my tower, my ivory tower of Viva paper towels.
You're going to be crying when you get canceled. You're going to be wiping your tears with those Viva paper towels because they're softer than tissues, okay?
They really are, honestly.
Oh, they're great.
What about anything come to mind for you when you were like, I've made it? I
recently hired a cleaning person, which I think is kind of
that's a good one.
Was kind of like a big leap for me, and it has been transformative. She is awesome. And it is so nice to have a clean apartment that I don't have to clean myself, and very good for my mental health. And so for me, I think that was like one of the biggest. I don't splurge. I'm a fairly frugal person. I don't splurge that much, but that was like, I want to do this, and it's mentally been very nice.
Love that.
And not that expensive.
Love that for mental health. Love that for relationships. Love that when you cohabitate with someone, cleaning person, when all the duties do not fall on one or are not trying to be shared between the two people that live there. Also a big unlock for sure.
Delegate and elevate.
Delegate
EOS
and
process.
Exactly. So what are we talking about today? We are going to do a IPO watch. It is officially fall, sort of. Are any companies going to go public for the rest of the year?
And why are we talking about it now? Because this is normally roadshow season. It's Labor Day is over, and if you want to go sell an IPO to your big investors, you would typically get on the road after Labor Day for a fall IPO, late September, October sometime, is in the old world when IPOs used to happen, but we don't live in that world anymore.
Right.
And so we don't know what's going to happen this fall.
It seems like the IPO roadshow got in the Burning Man desert storm, unfortunately. So the IPO roadshow has not made it through Burning Man.
Speaking of which, here we go again. We're going to go out to the desert and reject.
By the way, if you go to Burning Man and like Burning Man, please fast forward 3 minutes because
Yes, please.
we are not
Please.
fans. And
I
we
apologize
love
in
you.
advance for what I'm
I
about to say.
apologize to
but-
our clients who went and future clients who went.
And we
but
do have a
this is
couple
our
clients who
opinion.
did go, and I hope they had a safe time. I hope they had a
I
great
hope
time.
you had a
hope they
really
were
great
safe.
time. Okay.
Yes. Okay.
Pause
But-
and fast forward. See you in 3 minutes.
please hit the fast forward button a couple times. But okay, we're gonna spend like $10,000 to $15,000 to go mess up the desert and reject capitalism for a week. Okay, I'm gonna spend $15,000 to reject capitalism. That's not how it works. I can't even. It's so frustrating.
I get it.
It's so frustrating.
I get the need. We all need an escape. I get that.
Yeah.
And if you haven't figured out what your escape is yet, and Burning Man is your escape, and you want to go do drugs in the desert and connect with people, and
that's your business.
That's your choice. But I don't want to hear about it. I don't want to see it on Instagram. I don't want to be sat down at a bar. I don't want to be sat down at a party. I don't want to hear about how transformative it is. You sound like missionaries, and I don't like it. I don't like being recruited to join your cult. Also, what do you gain by going to Burning Man? Some people gain, out of body experiences. They have form new connections, lifelong friends. But you know what you lose? You know what you lose? You lose my respect. Sorry. I'm not a fan. I'm really just not a fan.
And
anyway.
I read this tragic story of someone who.
Oh yeah, someone died this year. I mean, people die every year,
on the first
right?
day this year.
Yeah.
Not clear what happened. I didn't see what happened, and then you hear the stories after Burning Man is over of just all like the mountains of trash that are piled up in all these places. As they're exiting the desert. I think it was last year where there was the mudslide and people got stuck in there. I don't know. I mean, I guess it scratches an itch for some folks. I love my national parks to get away and unplug. Everybody has their thing. I'm really not here to judge anybody, but I do think that not my cup of tea. But if it's
not
your
my
thing,
fantasy, as they say.
Exactly.
Right, but I mean, Burning Man has become a place for wealthy Bay Area.
It's a status symbol to go.
Yeah, right.
It's like taking that Uber to the airport or
exactly.
buying your Viva paper towels.
Is that a rung on the financial independence ladder? Is being able to drop, I don't know, cheaply? You could do it for what, $3,000, and on the high end, people are spending hundreds of thousands of dollars to build these like little camps in the desert. Anyway, shitting on Burning Man. It's always fun for me to see the like scantily clad, both men and women, running around in the desert wearing goggles, looking real silly. I mean, it's steampunk. Like that's like, I get it. Like everyone needs a fun party to go to. Like it's basically a rave. Like that's fine. Go to your rave, but I don't want to hear about it. Oh, and side note, my Instagram algorithm right now, I've been researching, like my hair is just not great these days. So I've been like researching
me too.
thickening
Tell me
hair.
about it.
All right, John. Thickening hair. So somehow the algorithm has decided that what I want to see is white girl dreadlock Burning Man horror stories. So it's like, I'm getting fed all this content.
This is why you're so fired up about this.
Oh my God. Like I got dreads for Burning Man and it ruined my hair and I had to cut all my hair off. Anyway.
I would love to get dreads for a Burning Man, honestly. That'd be a great problem for me to have over here. I have a hat on because I got fried yesterday. I was wearing a trucker cap. It's the end of the summer. I was at the pool for Labor Day, and I'm like, I'm not going to put on sunscreen because I'm a jackass. I got cooked. And I have this very weird tan line here and back here.
Away.
It's very bad. Yeah, exactly. So not a great look at the moment.
Always wear sunscreen, folks. Come on.
Always, every day.
Was
that Baz Luhrmann, right? Wear sunscreen? Isn't that the song or whatever from like the 90s? Yeah.
Oh, I don't know. No, I'm not familiar. I've recently switched to mineral from chemical, but that's a whole different podcast. Anyway, what are we talking about?
Mineral podcast, folks. Stay tuned.
My beauty and skincare podcast? I wish. Okay. What are we talking about? We're talking about IPOs. So let's fast forward, John. Or sorry, not fast forward. Let's rewind. September 3rd, not 2024. September 3rd, 2020.
Ooh, so it was Labor Day.
What are you up to, John?
So I think it was Labor Day, and AJ and I were working on Labor Day because Asana and Palantir were about to go public, and we had just signed
on the same day.
On the same day, and we had just signed like 30 clients. And it was like, oh boy. And I had been at Brooklyn FI for a month, so no big deal. It's all going to be fine, and it was. Ended up working out quite well for everybody involved for the most part in that process.
Yeah, those who hired us in time. Anyway,
who hired us, yeah. But yeah, I mean, IPOs were taking off, and that That was when a lot of companies were starting to go public. COVID, things had kind of calmed down. The economy had come back. And it was really...
it bounced back in 6 months, basically? COVID starts in February. By August, we're good. Or June, really.
Fine.
Honestly.
I mean, the market kind of recovered by June. Unemployment was still very high. But the overall state of the market was in a decent spot. There was still a lot of stimulus. And
we're all terrified, by the way. There's no vaccines. Like, people are still...
I mean, I was like hunkered down in Delaware. Like this grizzly... There's videos of me from back then, like this grizzly dude with like a thick beard and like haven't gotten a haircut in months. Anyway, you guys still hired me. It all worked out. But, we were basically embarking on, I would say, about an 18-month journey of IPO, kind of chaos and a lot of companies going public. Then you had Coinbase in the spring. You had BarkBox SPAC. You had a bunch of SPACs through the end of 2021. You had BuzzFeed SPAC at the late in 2021. And it was early 2022 then when things really started to dry up as rates started to increase rather rapidly. The economy started to slow. There was a lot of fears of recession. But yeah, we were basically like, in the first quarter of IPO madness 4 years ago right now.
Yeah, and we're not seeing that madness. This is the third year where we haven't seen that madness. 2022, 2023, now 2024.
Yeah.
But thinking back to that time, we are seeing some rumblings, right? We'll talk about what we can expect for Q4 or what we think we can maybe expect for Q4 and beyond in 2025. But I'm just thinking back to that time, like what were the kinds of things we were advising potential clients and clients to do ahead of these IPOs? Obviously, at that point, they were happening on Thursday, but just thinking about like what could one do ahead of an IPO before it happens? Like a lot of people are sitting on the sidelines right now. Their company, their CEOs and all hands are saying, we're targeting Q1 of 2025 for an IPO. What should you be doing?
Yeah, and I think what's interesting is we think back to particularly where we were 4 years ago right now. We had like these IPOs were scheduled. The dates are never like firm, but it's like on or around September 20th, on or around this date. And so we had, a fair amount of certainty that these were very likely events and strict timelines, which is a little different than the environment we're in right now. And so with that context in mind, we were advising clients, let's say 4 years ago in August, when they could, before their pre-IPO lockup window took effect on exercising, what can we exercise?
Can we unpack that a little bit? We've gotten some feedback that we talk too fast and use a lot of jargon.
Too fast and too technical. Okay, so typically, AJ, lockup period, pre-IPO lockup period.
Help, I'm locked up. What happened?
Okay. What we're talking about here is you are typically not able to transact in your company stock for a period before the IPO and a period after the IPO. And typically...
Because they just want to stabilize the markets, right? They don't want a lot of trading. They don't want the CEO dumping 20% of their shares. Well, usually you can dump 20%. Usually can't dump more than 20%.
Yeah. Well, even the CEOs, it's trickier there because they typically own a lot more, especially if a private company. But and beforehand, they restrict it because they literally need to like get the stocks transferred into like a Morgan Stanley, Fidelity, E-Trade, where it's going to be held, and they don't want you messing up the records. And so oftentimes, maybe 60 days out, 45 days out from when you're going to go public, they're going to say, stop, can't exercise anymore. You'll wait until the company's public and everything's switched over because we need to have all these records right, push them over to these systems. And so if you're...
Isn't that crazy? I mean, think about it, guys. Like, it's literally just like, okay, on Tuesday, this is how much everyone owns. But we got to get this data from Carta or someone's spreadsheet in finance, which used to be the case, into ComputerShare or whoever is going to be the broker of record. Like, we have to move that over. And that... They've gotten it down, I think, to like 24 hours, but sometimes it's a couple days, sometimes it's a week. I think it used to be longer.
It's a little bit easier. What we've seen more of in this IPO drought is that more companies are moving to these platforms ahead of their IPO so that they can live there. But typically speaking, there is some period of time before the company goes public where they're like, time out, we're not doing any of this exercising until after the IPO.
Right. So you need to do it well ahead of then, right?
Correct. And so if you're at one of these companies we're thinking about right now, and we'll drop a few names, right? We're thinking about StubHub. We're thinking about
name dropping.
We're thinking about CoreWeave, Figma, Klarna, Rippling.
Ooh, Rippling. That's going to be a good one. Rippling, folks. Rippling. Holler at me. We love Rippling.
Yeah.
We almost signed up for Rippling. That's another podcast too.
That's a whole other episode on PEOs. But if you're there... you need to be thinking now, what can I exercise? What should I be doing with this equity compensation to optimize it, but also minimize my downside along the way, right?
Yep. Right. And planning for an IPO in a perfect world. I think we have this chart somewhere where it's like, when does planning for an IPO happen? that happens the day you sign your offer letter, right? That happens when you get your grant. That's your first opportunity to decide what you want to do with this equity. And you might have an opportunity to do something, or most likely, you probably have a year to decide what to do with the equity, because there's probably some kind of waiting period, some kind of vesting schedule. Like, that is the time where you need to talk to a professional, or at least talk to your partner or whoever's involved in the household decision making about, hey, do we want to risk some of our own wealth in this company that has a very slim chance of returning value to us, like full stop, period. What we're kind of talking about, and we have no control over it, right? Right. Like, maybe you're a genius product designer, but your beautiful product is not going to be the thing that makes the company go public. There are forces beyond your control.
Think it is, right? We all think we're like the key contributor,
obviously,
right?
So that's the first point, right? The second point in my mind is really when rumblings start of an act, and we're talking about IPOs. That's a big event, right? That's going public. That is your company going public and having Joe, Dick, and Harry being able to buy shares of the company.
Your Aunt Thelma can buy shares in your company stock at this point.
But what is more likely, right, is either a merger or an acquisition, and it's often the same outcome for you
a tender offer or secondary sale,
right? Okay, so, day you get hired, that's the time to start thinking about it. But really, we're talking about when you get rumblings of an IPO, right? This is usually when maybe a buddy on the finance team, or they start talking about it. They start saying, we're targeting QX of X year. That is the time when you need to reach out to us.
All hands, right? Yes. You're hearing it come up more often. Not the whispers, but the out loud part. And you're hearing about S1 filings and that sort of thing.
Yeah, I'm very frustrated when people don't do anything, right? That it's like indecision. I get it. Like, it's a big decision. You hear these words like AMT and QSBS and RSUs and ISOs, and like, what the hell are these people talking about? Like,
what do all those things mean? Remind me.
Yeah, I don't know. Like, these are things that tax experts can help you with. And like, I am tooting our horn because this is what we do all day, and we've helped people make decisions that have led to dramatic increases in their outcome, right? Yeah. We can't promise that for everyone, right? We don't have control over the markets, but decisions, when you are advised by someone who knows what the fuck they're doing and has done this hundreds of times before, you can often have a better outcome for you and your family. Meaning, if you start things earlier, we can potentially exercise things. We can have longer holding periods. We can actually lower your tax rate because of decisions that get made ahead of time. Now, no one's perfect. Oh, go ahead, John.
I would say, let's unpack that. Like, people like, well, how can you really lower my taxes? What is that? What does that mean? Why does taking action earlier translate potentially to a lower tax bill? And so that comes through a couple of different ways. First of all, when you have incentive stock options, ISOs, as we like to call them, and you go and exercise them, there is potentially a tax bill. Meaning you buy them? You buy them, correct. Okay? There's potentially a tax bill tied to something called AMT, or alternative minimum tax, right? And that tax is tied to the price that you pay for your shares and what they're worth at that point in time, the difference between those two things, also known as your bargain element, right? You're buying something on sale.
Every time we try to explain this, not with a visual, is so stupid, but yes, good job. Yes. You're doing a good job.
So what we have here is that if you exercise sooner when that spread is smaller, then there's potentially a lower tax bill on that exercise. Great. The other thing there is that the earlier you exercise, the more appreciation is likely to happen in that stock between when you have your liquidity event, whether it's a secondary sale, tender offer, acquisition, or going public. And therefore, more and more of that gain will be a capital gain, which is taxed at lower rates. And so that is how getting out in front of this can translate to true like dollars in your pocket.
And we're talking millions here, right? And we're not promising that for every person, but we have anecdotes of decisions that get made early on that result in multiple millions,
hundreds, thousands, or millions of dollars, right? On these things, right? Literally paying 33% in tax instead of 48% in tax.
Or 56 if you live in New York City. Or 56,
depending on where you are.
Also, one thing that I always like to say to folks is the way that your equity is granted to you is in very specific grant lots or denominations. So you think of it as, I have 50,000 shares of X company, or I have my equity is worth 3.4 million, or I can exercise this much. Like, for some reason as humans, we think, oh, I got to exercise all of it. Like, you don't have to exercise all of it. You can exercise part of it at certain periods. You can sell part of it at certain periods. So I think a lot of folks, because all of this is so complicated and because the tax outcomes are so unknown until someone actually files your tax return and probably files it wrong, by the way, which we've seen almost every time.
Too often.
Like, you can do 10% of it. So like, if you're listening to this right now and you're like, I don't want to hire you guys. I don't need help. I'm not sure. My company, it's not really going public. Like, just take 10% of what you have and just make a move to see what happens, right? If it's not going to be a dramatic impact to the rest of your financial life, like just even going through that exercise of emailing finance or clicking the button in Carta, like that gets you used to like, oh, that wasn't that bad, right? I spent $2,000 to exercise a couple shares of my company. That $2,000 might be gone forever, but that's okay. That $2,000, as we've seen in the past, depending on if your company is one of those amazing unicorns, that $2,000 could turn into $50,000 or much more.
Be careful, because it could trigger an AMT bill if you're not paying attention. You could have a big tax bill. And so what you want to do when we're thinking about planning for this is set a budget for how much we're willing to spend on exercising and how much we're willing to spend on taxes tied to that exercise, so that you don't end up in a spot where you've clicked a couple buttons in Carta, you transfer $2,000 and now you have a $50,000 tax bill. And I think that really where getting objective advice about this from professionals can be exceedingly helpful is when somebody's able to say, well, hey, you got $75,000 in cash, but we still need an emergency fund. We still need to save for your wedding that's coming up, but maybe we can set aside $10,000 for this, right? And I think it's really kind of having that perspective that's really helpful, having guided hundreds of folks through these types of events, because sometimes you don't have that instinct. You don't necessarily. You will go through maybe one, if you're lucky. If you're really lucky, maybe two of these events in your entire lifetime.
Yep, for sure. I mean, it's like winning the lottery, right? It is very similar. Like anyway.
A similar risk associated with winning the lottery in terms of the adverse financial outcomes if you're not careful with it too.
Totally. Yeah, on the other side, having someone to coach you through, what does it look like to sell off $1 million of stock every year for the next 5 years? Should we sell more? Anyway, well, so like there's this article in the Wall Street Journal, the IPO market gets cold feet. Well, it's been in freezing waters for 2.5 years. So
those feet have not been warm for like 2.5 years.
My toes are frozen and being cut off next week from frostbite. So sure, I guess we're getting cold feet again. But basically we had this market correction in early August, right? It was like Monday, August
3rd.
Monday, August 3rd, 4th, 5th,
Somewhere
I think. Yeah, let's do that. Calendar math. I'm really good at that, obviously. I think it was August 5th.
5th. It was the 5th, yeah.
We had this correction. Great day to be in and have money invested, because we can tax all service, things are on sale. But anyway, that scared the shit out of people, right? It's too much volatility. If you are going to bring your company public, the experts that you have hired, who have been through this a million times, are going to advise you to wait for a long period of market stability, because you don't want the price of the yen to impact your software company going public that you've worked for 15 years to build. And you don't want your personal net worth as the founder or CEO or seventh engineering hire. You don't want that to impact you. So we're waiting for calm waters. At least that's the word on the street, right? So anything that was projected to go public in 2024, you're right, John. Like the roadshow is
late. It's getting late.
It's like TikTok. We're supposed to happen now, but like if you haven't booked your Thanksgiving flights already, like they're going to be expensive. You know?
Oh no.
Driving
home for Thanksgiving, I'll be fine.
I know. I always get in trouble for booking things too early in my family. But anyway, so yeah, we're super excited. StubHub, I don't know, could go either way.
We've been hearing about them for a while. So that's one that's been on the radar for a bit. Canva's a company that's grown a ton. Yep. We have some clients that have some equity there. We've seen. Be curious to see what happens there. It's a popular tool. It's really made. We use it. We use the product.
Love Canva. Yeah, I mean, look, we had the big. And look, there are companies going public, right? There are shipping logistics companies going public that none of us have ever heard of. There are pharmaceutical, biotech,
always biotech.
Typically there's not a ton of equity being granted in those companies to employees at all levels. That's why we kind of focus on tech IPOs, because that's just generally
bigger
what we
names.
see. Yeah. And honestly, bigger PR firms. Like they literally have PR departments to talk to drum up interest for these public offerings, right?
Well,
if it was
the deal
a private
size
sale,
is just much larger, right?
Totally.
We're talking about more dollars for folks that have exposure to this.
So, right, we had a successful tech company IPO earlier this year. Reddit went public. The share price right now is higher than the IPO price, which is a great indicator that it was a successful IPO. We'll see how it goes so far, right? Today.
We had one a year ago. I mean, Instacart went public about a year ago now, right? Yep. And they've done all right. Companies, larger companies that we've had our eye on for a while have dipped their toes in the water with this, albeit slower than I think they thought 3-4 years ago. But I do think that some of these places are going to start to, trickle into the market in the months and years ahead, because at some point you're just going to have to. It's a leap of faith. I mean, it's like starting a relationship of sorts with the public markets and becoming a public company. You're taking a leap. It's a risky thing. You don't know what's going to happen.
I mean, you're literally airing out all your dirty bag. Like you're showing everyone your baggage. You're filing your S1. That's telling everyone about your mommy issues, the fact that you're a slob and you're broke in one.
Are we making money? Right? What do our revenue numbers look like? All these things that are currently not public, and you're putting it out there. This isn't just your dating app profile anymore. This is the real thing.
The company's S1 is like, yes, I have all these issues, but I am going to therapy. So
exactly.
I have a path to profitability. I swear.
I'm working through it, and it's going to be all right. Okay.
I'm on antidepressants, and I'm in therapy, and I have a path to profitability.
Yes, and I have 400 pages to detail that right here instead of just my app profile that used to read on Crunchbase, and therefore, that brings some degree of credibility, perhaps. I think that we had a lot of companies 2.5 years ago, 3 years ago now, that went public that maybe shouldn't have, that went public a little too quickly, that paid a price for it. You can see it in their stock price performance.
The public paid a price, or the latecomers paid a price, but the original investors and VCs probably had a nice exit, right?
Yeah.
So, I mean, that's the complexity of IPOs, is that there's a lot of stakeholders, right? And a lot of people have differing reasons to rush IPOs, right? If someone's had their capital tied up for 10 years, like they want that capital out.
They want to invest in something else.
And they'll take 75 cents on that dollar if they have to, because that's how things go.
But what I was trying to get at there is, I think companies are being a lot more deliberate about whether they go public or not. And it's not this whole like, oh, screw it, you've got a cool tech idea, merge with this SPAC and you'll be public in 2 weeks type. We saw 3 years ago.
Well, I mean, that's what's interesting is these companies that are on our watch list, some other ones. Databricks is a huge one. Canva, Chime, that mobile banking app. Figma, which had a failed
the Adobe
nonsense
merger
with Adobe. Chobani, this yogurt company that I feel like
company.
Yeah, Shade and I talked about the Chobani IPO in like one of the earliest episodes of this podcast, and we were like, they're going public, and they had this beautiful S1.
We're gonna rerun that when they file.
Yeah, we'll just do a replay. 5 years later, we still don't have an IPO. It's still just like rumored. Smithfield Meats.
Maybe?
What's that?
Panera Bread's on this list.
Panera, Skims, Kim Kardashian.
What's Skim? Oh.
Maker of clothing, most notably shapewear.
Klarna is on this list. We saw a firm go public a few years ago, and their stock's gone on a wild ride during that time frame.
Liquid Death, the carbonated canned water company, which is, I mean, again, that scares me, because that's just like
Liquid Death scares you. Yeah, me too.
That's pure marketing, right? So I'm curious to see if this stays on this list of potential IPOs or actually goes. So what happens when your company does IPO, right? You have to think about selling or holding, and you go from knowing the price of what your shares are worth, right? The company releases, typically they'll update the valuation at least once a year, maybe more often if they're raising money.
Once a month, once a quarter, once a month when you're getting closer to it.
So that's pretty slow, right? Like I know what the price is. I can make decisions for my financial plan in my life. But once your company goes public, the price is changing every minute when the stock market's open.
Every second.
Right, exactly. People are building cables under the Hudson River or whatever. Anyway, that's a whole other book.
To make it faster. Is that what you're saying?
Anyway, that's a whole other episode. Read the Michael Lewis book. It's great. Flash Boys.
Great book.
Anyway, you go from slow updated prices to help you make decisions. You have time to think about it to like, oh my God, what do I do? Do I sell today? The price is $25. Now it's $17. Oh my God. is this price high enough? Why didn't I sell at $10? Like, it's this maddening clusterfuck of decision making. What do we do? What do we do? How do we fix this?
Here's the consolation, which is that going into an IPO event, you typically have some type of lockup and some type of restriction, and you're only maybe allowed to sell 10 or 20%.
I mean, they give you the answer, right?
And so they give you the answer to the test, and guess what? Sell that big chunk that you're allowed to sell, because you have no idea what the price is going to look like in 90, 180, however many days the lockup period is. And so that helps. But then you have to wait and see, and you have to watch that other 80% go like this the entire time. And then you have to hope that at the end of the lockup, every single other your colleague and all the other investors don't hit sell at the same time and cause it to drop like a rock.
Yeah.
And so between those two things, that's very nerve-wracking, but you really need to like plan it out, right?
Yeah.
Am I really bullish on this company? And I think it's going to be worth, it's going to debut as a $10 billion company. I think it's going to be $100 billion in a few years. I want to maintain my exposure. I want to chisel away slowly. Or am I like, hey, this is worth $4 million. That's going to change my life. That's the down payment on the home of my dreams. My significant other can change their job and start their business. And I'm pretty happy here. I'm going to vest out this stuff, and I'll be fine. And I want to take 80% of my chips off the table pretty quick.
Isn't that the crux of this all? Like, how much money is enough, right? What's your number? That's an important.
When can you afford all the Viva paper towels you want for the rest of your life? That's the real question. When can you
build a castle of Viva paper towels? I'm not there yet. I'm not there yet.
Yeah. You have 18 rolls, AJ. That's pretty damn close.
Well, I have to clean my window, so we're going to be down to 17 real soon. Right. So that's the big decision, right? Like when to get out. That's like amazing. You won the lottery, right? Your company went public. You held equity for more than. Typically, we see big payouts where for folks who have been there for at least 3 years, have had that original grant at least be 75% vested, almost, right? Yeah. If you joined the company a year ago, that's great. You'll get likely new grants of shares in the form of RSUs as a public company, which we love. We love RSUs. RSUs are income, right? Income based on the share price of the company. So that's great, but
they're always worth something, assuming the stock price is bigger than zero, which is different than options.
Right. But we see the big payouts, the huge liquidity events. That's why this podcast is called the Liquidity Event, you guys. For those who didn't know, we see these big life-changing liquidity events for folks who've been at companies. Let's call it 3+ years. I feel like that's a good benchmark. It's
a good amount of time.
What do you? How much is enough? Right.
Yeah.
I've had clients tell me if I can get $1 million out of this, I'll be the happiest person ever. Some people are like $1 million. That's 1/3 of the down payment on the brownstone I want to buy. So no, I got to stay in this for longer. This needs to be $8 million, or I'm never going to be satisfied.
Yeah.
And if you need $8 million out of your company, don't do it in 1 year, because taxes are going to kill you.
Yeah. No, it's going to be a big deal. Well, you need to have, if you have like $20 million in stock, then you could probably get $8 million out in a year, but otherwise you might start moving the market too, depending on the size. I think this is a huge question, which is why I always bring it back to the financial life planning that we do, which is not about the numbers at all, but like what's important to folks is a huge driver in what that trading plan looks like. And thankfully, a lot of the planning ahead of an IPO is driven by what's your cash flow, how much risk do we want to take. A lot of planning at IPO is tied to what are the lockup restrictions, how much we can sell. It's really that third piece of the trading plan, post lockup, what can we sell? And normally at that point, thankfully, even if somebody hires us right at the IPO, we can have more of a detailed conversation about what is important to you? What are we planning for here? And know that, because that's the biggest ingredient in the trading plan, not AMT optimization, not, this tax number, but what are you trying to accomplish? The other pieces are really important because
totally,
they're the next level, but trying to figure out that is really hard. And I think it's really hard for people that go through these major financial life transitions to understand what's important to them and decide, because all of a sudden what they can achieve is so much different.
So different, right? And who you talk to about this, right? I mean, a lot of clients have said to me over the years, like, I'm so glad I have someone to talk to about this, because I can't talk to my friends about becoming a millionaire overnight. That makes me uncomfortable. I don't want them to feel like I'm talking down to them. I can't talk to my family yet because they're not going to understand. Like, I need someone to just like share this with and talk through it. Also, before we close, I just want to touch on one thing, considering we started with death, and we always talk about death, is estate planning, right? Yeah. When your net worth changes dramatically overnight in a complex way, a lot of your net worth is tied up in company shares, like, you need to have a will and estate plan in place. Like, what?
related to this, a lot of the equity plans, if you have options, the post-death exercise version might be 180 days. If you don't have an estate plan in place, it might take you that long to go through the court system to get somebody appointed as administrator of the estate.
So it's, a lot of folks, John and I and Shane included, drag our feet on getting our estate plan implemented. The moment you have equity in public companies, like, you need to have that locked down, because chances are whatever you've worked hard for will either not go to your loved ones or will just take so long, and the headache will just be so devastating. So on top of you not existing anymore on this earth, they're going to be stuck with this massive nightmare of untangling your assets through probate court. So
not fun.
Get a freaking estate plan, please, tech folks or anyone who's got equity. It's so important.
Everybody needs an estate plan. Only the people who aren't planning to die can skip out on the estate plan.
Right. We're all invincible. Like, I'm living to 1 million. My 101-year-old grandfather is like, I'm invincible.
Murray Grosson has a good case to make there. Okay, I'll give him credit.
Speaking of Chobani, yogurt is his secret. Oh, also, eat yogurt. Eat your yogurt, kids. The
follow
oldest
us for more hot financial tips. Eat your yogurt, please.
The 100 and whatever-year-old woman, the oldest living woman, just died, and her secret, she said yogurt. So maybe he was right all this time. So anyway,
my grandmother drank like 6 beers a day, and she made it to 93. So maybe that's the answer.
Who knows what the secret is? We all got the secret. But anyway, life could be long, life could be short. We don't know. So if you got money, use it. Anyway.
Buy the paper towels, folks.
This episode is brought to you by Viva. Not paper towels, folks. Paper towels. Not toilet paper. Fantastic. Thanks so much for listening, folks. You can email us your financial questions at liquidityevent@brooklynfi.com. You can always leave us a voicemail at memo.fm/liquidityevent. We will play it on the air. And finally, if you want to be weird about it, you can leave us a review. It helps, iTunes, Spotify, all that stuff helps our genius financial advice get to more listeners. Always a pleasure hanging with you, John. See you guys next week.
Thanks, AJ.